I'll be talking about Azure Minerals and predominantly our advanced zinc, lead, silver project in Sonora, the Oposura project. First of all, we'll be making some forward-looking statements today, and we've got a disclaimer there regarding those at the start of the presentation and at the finish. Azure Minerals is listed on the Australian Stock Exchange. We're based in Perth, but all our exploration assets and our focus is in Mexico, and particularly northern Mexico. We've got a small capital structure, just over 100 million shares, $5.2 million in the bank. We've got about 40% of our shareholders located in North America or Europe, which is an indication of the interest of those markets in what we're doing. And we're relatively tightly held with the top 20 owning just under 50% of the company.
For the best editorial on junior mining, visit cambridgehouse.com/mining. Click the link in the description below to learn more.
So the highlights, our two key assets are in Sonora. Oposura, which I'll talk about in more detail, is a zinc, lead, silver project that the company acquired in 2017. And Alacrán, which is a silver, gold, copper project where the company discovered silver and gold deposits there in 2015. Both located in Sonora, which is a really good mining and exploration province. It's safe and stable and very supportive of mining. Management in the company's got a really good track record of discovery, both with Azure and prior to Azure, also in developing and operating mines, and we've got a strong cash position. So these are our main properties in Mexico, most of them in northern Mexico and Sonora. Alacrán is a gold, silver, copper project just south of Cananea. Oposura, northeastern Sonora, about 200 kilometres from the capital Hermosillo, where we've got our head office in Mexico. And Sara Alicia, which is a gold, cobalt project in southern Sonora. The company also owns the Promontorio project, which is a porphyry copper, gold, silver project in Chihuahua. On to Oposura. This is a photo of the Oposura project area taken from the east, looking down on some small historical workings into that project. To give you an idea of what's so good about this project and its financial metrics, running around the edge of that hill is outcropping massive sulfides, and those sulfides go horizontally into that hill for about 1.5 kilometres to the west.
For the best editorial on junior mining, visit cambridgehouse.com/mining. Click the link in the description below to learn more.
And what you can see there is just a very shallow terrain for Mexico, which means when it comes to developing that project, in the first years of production, we're going to have some very low strip ratio open pits, mining primary sulfide, high-grade zinc, lead and silver. So as I was saying, in the true Australian fashion, we haven't been mucking around with this project. It was acquired in August 2017 for $1.5 million US. The company owns the project 100%. We defined a mineral resource in July 2018, 9 months after acquiring the project, and we finished a high-quality scoping study in October the same year. So we've really been moving with it. We're targeting a feasibility study at the end of 2019 and production at the end of 2020. These are the financial outcomes of the scoping study. So really good numbers, a good NPV. What's really important about this project is the IRR and the payback period. So an IRR of approaching 80% and a payback period of just over 16 months. And as I was saying, the reason for that quick payback period is we've got some very low strip ratio, high-grade open pits in the first 1 to 2 years of production. And that leads to that C1 cash cost in year one of 14 cents US a pound, which is we're saying it's in the lowest quartile of zinc producers, but it's a really low cash cost. And that's one of the things that makes this project really attractive. It's also got a low capex, 50 million US, and that's associated with plant development. There's virtually no mining, pre-production or sustaining capital in this project. The reason for that is that the ore body is flat. We don't have declines going down a vertical ore body. Most of our development to access mineralisation beyond the open pits is within mineralisation. So it's very attractive from a mining perspective. Okay, this is a bit of a busy slide, but it's really important to have access to infrastructure. We're blessed at Oposura with a 230 kV power line within 10 kilometres. We've got potential aquifers on site or within 8 kilometres in the Moctezuma River Valley. There's a bitumen highway within 6 kilometres of the project and an existing gravel access road into the project. We've already got communications on site, line of sight to a comms tower in the nearby town of Moctezuma, and we've got arrangements for surface rights in place with private owners of ranches over the project. We've also got easy access to concentrate markets. The project's only 300 kilometres by road to the export port of Waymas. From there, concentrates can go to Asia or Europe. We're within trucking distance of Torreon, where there's zinc and lead smelters. Also within either shipping or trucking distance of Manzanillo, where there's zinc export facilities and zinc blending facilities. Other project attributes, some of which I've spoken about already, but the primary high-grade massive sulfides start near surface. There's little to no oxidised or transitional sulfides in this project. There's existing small historical underground workings, and we can see primary massive sulfides within 5 to 10 metres of surface. Average is 3 metres thick. It gets much thicker than that. It's high tenor. I've mentioned simple starter open pits and underground room and pillar mining. With that room and pillar, we expect to have high mining extraction recoveries because the maximum depth below surface that we can see at the moment is about 140 metres, average depth of about 70, so there's really low mining stresses. We expect to have really good mining recovery. From a processing perspective, the mineralogy of the deposit, it's mostly galena and sphalerite. There's very little else there to muck up the flotation circuit. So what we've seen in the scoping study and the test work we've done is that we're generating separate lead and silver concentrate in the first round of flotation, followed by zinc concentrates. They all meet benchmark concentrate grade standards, and they're all very clean. We've sent our concentrate analysis off to at least a half a dozen metals traders and end users, and no one has identified any deleterious elements of concern in those concentrates. Okay, these are the project metrics at the moment, and there's plenty of upside to this. We've got a JORC resource of just under 3 million tonnes at just under 8% combined zinc and lead. Average annual production just under 20,000 tonnes of zinc metal. 10,000 tonnes of lead metal and 145,000 ounces of silver. Again, as I said, we're producing clean, high-grade zinc sulfide concentrates. We'll be able to meet the benchmark zinc grade of 53% and the benchmark lead grade of 60%. But there's plenty of upside. This is a slide showing an isometric view of the project looking from the south. In the east zone, we're showing the open pit there with the mineralisation that's going to be mined in that open pit shown in purple. In the west zone, we've got open pits, 3 small open pits, A, B and C, and then the material that's shown in red is what we'll be mining that's shown in that scoping study by underground room and pillar mining. However, we've also been drilling since the completion of that scoping study in October into the central zone. And you can see some of the results into the drilling in that central zone because we wanted to demonstrate in the first instance that Oposura is commercially attractive. In the second instance, we wanted to prove the exploration potential and the resource upside potential. And we've done that in the central zone with the drilling we did at the end of last year. So, some of the results in there, 6 metres at 15% combined zinc lead, 6 metres at 28%, 4 metres at 24%, and another 4 metres at 20%. That's all in the central zone, in the 1.4 kilometres between the east and the west zone at Oposura. So this is a really attractive project. We've only drilled 5 holes into that central zone, and that's what we picked up, so that's a pretty good return on that drilling. And it demonstrates the potential to increase the life of mine and the production at Oposura, and it also demonstrates the exploration potential that continues further on in the project. And that's some of the dimensions of what we're looking at the moment. About 1.5 kilometres from east to west and 400 metres north-south. And that's just in that area. Okay, that's what we're doing at Oposura. Just in summary, we're going to be doing a feasibility study on that this year and moving into project development and operations in 2020. The other advanced project that we've got in Sonora is Alacrán. Azure owns 100% of that, and in 2015 the company discovered near-surface gold and silver. We were too successful, and Teck elected to buy back into that project. They had to spend $15 million to earn 65%. They're focusing on deep porphyry copper targets. In summary, we've got a really good commodity spread. We've got zinc, lead and silver at Oposura, gold, silver and copper at Alacrán. We're progressing Oposura to mine development and production in 2020. We're free carried at Alacrán to any upside that Teck can see in that project, and we've got a lot of blue sky at Oposura and Alacrán. We're at booth 801. Our exploration vice president for Mexico, Brent Hendrickson's here as well, and he can take you through some of the core that we've got on display there and the exploration potential at our other projects. Thanks for your attention.